What's up, everyone? Welcome back. If it's your first time here, I hope you stick around and hopefully you can learn some of these life-changing skills. We're going to go through the markets today and see what the price action is telling us, see what the key levels are, and if there's any bullish or bearish edge on these charts. We're going to take a look at the daily and the weekly time frames and go across the markets. So let's get into it. So on Friday, the S&P was up 0.48%, the Nasdaq was flat or 0.01%, the Russell finished up 0.58%, and the Dow was up 0.59%. And that's all to do with energy, man. So just looking at the energy sector and what it's doing, hopefully the Dow can continue its run. But we'll take a look and we'll take a deep dive and see what's happening. So looking at the S&P today, we are now seeing the maturation of this bearish divergence on your MACD from one high to a lower high, higher high on price. It's a bearish divergence. You are being rejected at 60 on your RSI, which is the bullish control zone. The only thing you have going for you is you've not quite finished this pattern completion zone at the 886. You may not even make it there at this point, but it's still a possibility. So we'll have to see if there's any follow through to the upside. But as it stands, technically, you are bearishly diverging with increasing volume on your selling pressure. Taking a look at the S&P on the weekly, you still have this bullish divergence on both of your oscillators. Your RSI is in the neutral zone. You are still building positive momentum on your MACD. You haven't quite reached the supply line or this horizontal support. We'll have to see if we can make it up there to 40.58, which is also that pattern completion zone of that bearish chart. But on the weekly, you look fine. Just the indecision candle for the moment. We'll have to see what next week ushers in. You are coming into a lot of illiquidity due to holiday, December, tax loss harvest. So there's a lot of different variables going on during this time of year. All right, so taking a look at the Dow Jones on the daily, you did not hold above this level of inflection as you did close above here last week with this hanging man candle. Didn't really usher in too much of a pullback. You have held the bottom zone of the inflection point, and now your candle closing on the daily back above it. We'll have to see if there's any more follow through, but with this bearish divergence on both oscillators, and you've previously reversed here numerous times, we'll have to see if we can get a candle close back above, and if you're above this level long enough, you'll see the next level up. Keep an eye on the Dow. This is all energy, and if energy keeps doing what it's doing, you may see the next level. Taking a look at the Dow on the weekly, so we did have this beautiful upthrust in price on last week, and you back tested now once as support, rallied and candle closed back above these levels, which is very important to maintain your bullish bias. You have this bullish divergence still on both oscillators, not quite in the bullish control zone. You are slightly being rejected at 60. Let's see if there's any follow through. Next week you are building positive momentum on your MACD still, so probably the best looking index is the Dow for now. Taking a look at the Russell on the daily, you were unable to break the bigger supply line. You are still at a profit-taking level from target 1 of the supply line break here, and you're being rejected at the supply line and the 200 simple moving average. All week you've been rejected. You have this bearish divergence maturing on your MACD. You have it on your RSI. You're still just in the neutral zone on your RSI, but you haven't broken out of this bigger supply that dates back from the top here in November 2021. You're approaching it, you just could not break it. These other targets up here, if this plays out at all, it will underperform, just being that it's in a bear market. All of these bullish variables in normal market conditions should have a decent follow through. That's why you really want to take note of what's happening and learn these things. Learn your divergences, learn your key levels, so that when we are in normal market conditions, which they will return one day, you will be so much better positioned than everybody else, knowing these factors, that one day, these things will actually massively overperform. when you're back in a bull trend. But keep in mind, just trying to identify these bullish variables is what your goal is. So let's take a look at the weekly. So on the weekly for the Russell, you have this beautiful triple bullish divergence building positive momentum on your MACD. You are in the neutral zone for your RSI, but you have bullish convergence on your RSI as well. You have yet to break the supply line, but you are above your 200 simple moving average. What you're looking for is a break of the supply. You haven't done it. That's my only concern right now. It's just macro conditions. Who wants to own anything right now? Even though you have all these beautiful technical factors, it's in a downtrend. If you had all of these factors in an uptrend, yes, you would expect these to play out beautifully and overperform. If these perform at all, they're going to underperform just based on the macro conditions. Taking a look at the Nasdaq on the daily, I mean, just big yikes. This who wants to own tech right now? It's just, you have this bearish abandoned baby. You gapped up, gapped down, and we're unable to break above the supply line, and you're back in this channel creating a bearish divergence on your MACD, and your positive momentum is beginning to wane. You are under 200, you are under the level of inflection. It's not what you want. The Dow definitely looks a lot better. The Russell looks a lot better. Even the S&P look a lot better than the Nasdaq. And that becomes more apparent on the weekly. So when you're taking a look at the Nasdaq on the weekly, yes, you've held the parabolic trend dating back from March 2009. You've held it, you've back tested it as support, but what are you doing? You're being rejected at the 200 simple moving average on the weekly. Yes, again, like we talked about, you have this bullish divergence beginning to usher in positive momentum on your MACD, but look what you're doing. You're being even rejected on your RSI at the neutral zone. You have not broken the supply, and you have not broken out on your 200 moving average. You are back above this level here, but unable to break these levels from the supply and the 200 simple moving average with all of this bullish divergence is a bit concerning. We'll have to see what next week brings, keeping in mind the seasonality, the holiday, tax loss harvesting. So there's a lot going on, and a lot of traders usually step away at this time, go on vacation, enjoy time with their family. So never short a dull market either. So I'm definitely watching, seeing what Monday brings. So taking a look at the DXY on the daily, you are kind of rounding out bottoming process here. Negative momentum beginning to wane on your MACD. However, you still are in the bearish control zone, and you haven't quite hit that measured move of this 3 falling peaks. You'd think you would see the 200 simple moving average. You could not quite get there. So are you making a higher low here, then here, then here, then here, then here? It's possible. We'll have to see what next week brings. But taking a look at the weekly, if you do begin to pivot here, you see what's going on your MACD, right? Your one low, your potential higher low if you pivot here. Possibly hidden bullish divergence if negative momentum begins to wane and prices start to reverse here. Could this be a potential hammer candle? Maybe. We'll have to see for follow through, but you are starting to enter the neutral zone, and once you get back over neutral and head to the bullish control zone, we'll see if this really is a higher low. It's beginning to look like it might be. We'll have to see if we can get follow through and finish that pattern completion here at this level of inflection. As of right now, we're not getting it, so keep watching the dollar. Taking a look at the VIX on the daily, you do have this potential wave structure here of a bullish bat on your VIX, kind of confluent with your gap that's still open from August of 2022. you are still below the demand line, which originated from June of 2021. You are actually still below that, and on Thursday you bearishly backtested it, Wednesday you bearishly backtested it, and Tuesday you could just not hold above it. So I don't think the VIX is done selling off yet, but however, your negative momentum is beginning to wane. But what we talk about a lot of the times is as negative momentum is waning and approaching neutral to where you may begin to build positive momentum, you could just, like in this example here, you're losing your negative momentum and immediately begin to build again. So something to keep an eye on. Watch for this gap to fill, watch for this pattern completion zone, and if you're coming down to the 886, you also may be testing this level of inflection of support and resistance at 2066. Looking at USOIL on the daily, so it does look like this was the double top here. One top, second top, bearish divergence, bearish divergence. Your negative momentum is still continuing to build. You are in the bearish control zone for USOIL on the RSI, and if you break 75.25, look out below, you're going down to 62.27. Could be a real possibility if this is your neckline here, this level of inflection. You do see limit bids came in, buyers did defend this level for now, but break this, you know where you're headed. You still have this bearish divergence on both oscillators, bearish control zone. Be careful on oil. So taking a look at gold, you actually reacted at the 886 here. You've pulled back and held this level of inflection for now, but what it looks like to me is you're putting in a higher low. Less market participants own this asset than here, 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 and here. If you break this level of inflection, maybe you come down, retest 1685, put in a higher low from these lows, and continue your rally up. It's something we'll have to monitor, but as it stands right now, you're reacting at the 886. It's a profit-taking level, premium position for shorts to enter. Taking a look at silver on the daily, also you have the same situation. Here's your 886 from your swing high to your swing low. Price is reacting here, and you're just not able to get a candle close back above the 886. Also, profit-taking level when price has retraced 88% from this high to low. Definitely an area where traders are going to take profit. You weren't even able to hold this level of inflection of 2168, also failing to hold the 200 simple moving average. However, you are in the bullish control zone for now on your RSI, but your positive momentum is beginning to wane, about to hit neutral, and could start to go negative. So something to keep in mind on your levels. You may even come back and backtest 19846 as support. We'll have to see. Taking a look at Apple on the daily, what we were talking about last time is traders would take profit at this level of 151.93. We actually had buyers re-step back in, and you had this bullish engulfing candle on Thursday, and still once again Friday today you were unable to get a close back in this level of inflection. You are seeing some more sellers in this area. You want to get back above this level, back above your 200, and back above 156.96 to have more of a bullish edge. But as it stands right now, you're not in the bullish control zone on your RSI. But however, you are building positive momentum on your MACD, but you are at a profit-taking level to where in this range here, it's straight up, straight down, straight up. Are we going to go straight down again? Something to monitor if you get rejected here and break below this bullish engulfing candle at 146. So one asset I wanted to bring to your attention was FAZ. This was actually asked of a member for me to take a look at, and it seems quite decent. You are at the pattern completion zone of a bullish shark at a 886 retracement from your previous swing low to high, and you have bullish divergence on your MACD, bullish divergence on your RSI at a level of inflection to where it is a low risk, high reward area, to where if you have a stop marginally below your lowest low here, it's about 5% down and 20% upside. So taking a look at ARK on the daily, you just printed a massive bearish engulfing candle on the daily, and you're also having this form of bearish divergence from your one high, your higher high, one high, lower high on momentum. You are approaching the bearish control zone on your RSI. I'd look for this gap to fill in the coming week. Taking a look at Tesla on the daily, so what we talked about with this potential bullish divergence here is when you do begin to enter the neutral and where you should start to begin to build positive momentum, negative momentum begins to build again, and it's on higher volume, and you're still in the bearish control zone on your RSI, breaking key levels here from straight up, straight down, straight up, straight down, straight up, straight down. This time you're not going back up. It looks like you're breaking this level. You want to watch for follow through, and in between these two levels, you know what it is. Straight up, why not straight back down? Below 180.178 long enough, the next level is 110.85. So taking a look at PayPal on the daily, we've been talking about this potential distribution pattern that actually ended up playing out. We talked about 82.76 breaking. You'd see the next level, historical support resistance, limit bids stepped up, buyers defended. You put in this hammer candle, follow through to the upside. You've reached the upper historical support resistance, found the 200 simple moving average as resistance, and your RSI is back in neutral, pointing down. Could be entering the bearish control zone. You also have this bearish dark cloud cover where you've engulfed over 50% of the previous green candle. I'd look for more follow through to the downside and watch for this gap to fill. Taking a look at Amazon on the daily, what we've been talking about, under 101.80 is in this range. It's straight up, straight down, straight up, straight down, straight up, straight down again. So that's what we're watching for. We actually now bearishly back tested the upper level of 101.80. I'm going to look for this thing to finish out around 81.45. You could even call this bearish divergence on your MACD from your one high to your same high. One high, lower high on positive momentum, and it's even very significant on your RSI. You are in the bearish control zone. Positive momentum is still beginning to finish out waning and could enter neutral and start to go negative. Watch for this gap to fill, and you know your level is 81.45 in time in between these ranges. Alright guys, so I just kind of want to keep that a little shorter, more streamlined. If there was something you didn't see and you want to see on the next show, please leave a comment below, send me a message, let me know so I can incorporate it into the show. If you like what you saw, please hit that like, that bell, that sub. You'll be notified anytime I post a new video, and I'll see you next time. Thank you.